Hello and welcome to another Major Market Movements quick update for October 7th, 2015. I'm Quad G, and in this video we're going to cover USDJPY, but more importantly the triangle continuation pattern, which is a very common pattern that you see in the markets, not just for USDJPY, but various other markets. And this is a very strong, powerful pattern that gives us some great opportunities to get in long or short. And usually their product, which is usually a thrust out of the triangle, is highly probable when the previous move is strong and impulsive going into the pattern. So, for an example, back here in the late 1970s, early 1980s, the USDJPY was north of 250 points. And it had started to move down with the Japanese industrial takeoff when they started making cars and what have you. The valuation of the yen compared to the dollar strengthened, causing this pair to move down considerably over a number of years. And it was an impulsive drive to the downside. And once that was complete, here in about the mid 1990s, the pair USDJPY went into a sideways consolidation pattern, and it formed a triangle, very nice 5-wave triangle, 1, 2, 3, 4, 5, or more appropriately called A, B, C, D, and E. In most cases, it's a 5-wave move. It can be longer, but in most cases, it's just a 5-wave move. Triangle pattern, and then it's a continuation pattern because out of that consolidation we see another thrust to the downside, which continues the previous impulse to the downside prior to the triangle consolidation pattern. All right, so if we see other prime examples of this with this wave up out of 2011, we get some impulsive drives to the upside. And a number of times the market, USDJPY, moved into a sideways consolidation pattern, forming a number of different triangle patterns. Here we've got the impulse up, triangle pattern, fall through to the upside, thrust out of it, continuation pattern, and again settles into another triangle and a thrust out of that, and another triangle continuation pattern, and a thrust out of that, another triangle, another thrust out of that. So you can see 4 different times here on this upside move. We saw this consolidation pattern, this tightening of the movement, and then it resulted with a continuation to the upside. Well, same thing's happening again, except now possibly in reverse. Here we've got a thrust to the downside, moved right into another consolidation pattern, tightening triangle, and now it looks like it could be very close to continuing the impulsive drive to the downside, and possibly allow the price to come down here and fill in some of this manic movement to the upside back here in late 2014. At least fill that up, clean that mess up, as I like to say. So it's very possible. Now, one of the key things that you need to be aware of with a triangle pattern is that there's very key levels of support and resistances, and in this particular case the key level of resistance is this candle right here. The high there was at 121.22 or 23. That was the last swing high, and in this particular type of pattern you want to continue to see the highs produce lower highs as it continues long, and we've so far the market has played out exactly so. From this high up here we get a lower high, another lower high, another lower high. So really we're just in a waiting pattern right now, waiting for this continuation pattern to actually continue the price movement to the downside based upon the previous movement, which was impulsive to the downside. Okay, so that's something to look forward to going forward, and just to highlight this particular key resistance point right there at 121.22. So I would say bearish while underneath that level. If we break above that, then the pattern is disrupted and it could allow for actually a counter move to the upside, possibly all the way back up to the 124 handle, maybe even higher. All right, that's it for now. Adios.